For over 50 years, Southwest Airlines stood out with its iconic bags fly free policy, a feature that set it apart from other airlines. This perk made Southwest a favorite for budget-conscious travelers, who appreciated the savings on baggage fees. On March 11, 2025, Southwest announced the end of this era, shocking many loyal customers. The change, effective May 28, 2025, marks a significant shift in the airline industry, reflecting broader trends. No longer can Southwest use free bags as a unique selling point, a move that could alter its market position. The decision to abandon bags fly free wasn't made lightly, involving extensive deliberations and strategic planning. Southwest faced mounting pressure from activist investors, who demanded higher returns on their investments. These investors, focused on short-term profits, pushed for changes to boost the airline's revenue, even at the cost of customer satisfaction. The airline also faces increasing competition from low-cost carriers, which are aggressively expanding their market share. These carriers often lure customers with low fares and then make up the difference with ancillary fees, like baggage fees, a strategy now adopted by Southwest. The end of bags fly free is a major turning point, signaling a new direction for the airline. It signals a move away from customer-centric policies, potentially impacting customer loyalty. It also highlights the airline industry's increasing focus on maximizing profits, often at the expense of customer-friendly policies. The change has sparked mixed reactions from travelers and investors alike, with some seeing it as a necessary evolution, and others as a betrayal of Southwest's core values. Starting May 28, 2025, most Southwest passengers will have to pay to check their bags. This marks a significant shift in Southwest's long-standing policy of offering 2 free checked bags. While the exact fee structure is yet to be announced, industry experts predict it will align with competitors. This means that the fees will likely be comparable to those charged by other major airlines. This means passengers can expect to shell out $35 to $40 for their first checked bag. A second checked bag will likely cost $45 to $50. These fees can add up quickly, especially for families or those traveling with multiple bags. However, not all travelers will be hit with these new fees. Southwest is offering some exceptions. A-list preferred members, those flying on business select fares, and Southwest Airlines credit card holders will continue to enjoy 2 free checked bags. This is part of Southwest's strategy to maintain customer loyalty. This strategy aims to retain loyal customers and incentivize spending in specific areas. By offering these perks, Southwest hopes to keep its most frequent flyers happy. The new baggage fees are expected to impact travelers in several ways. Budget-conscious travelers, once drawn to Southwest's free bags, may now find themselves comparing prices more closely with other airlines. This could lead to a shift in customer preferences. The change could also lead to longer lines at airport check-in and security checkpoints as more passengers opt to carry on their luggage to avoid fees. This could result in increased wait times and more crowded terminals. With the introduction of baggage fees, Southwest joins the ranks of its major competitors. Delta, United, American Airlines, all have been charging for checked bags for years. These fees have become a significant source of revenue for the industry. In 2023 alone, U.S. airlines raked in over $5 billion from baggage fees. Here's a quick comparison of typical baggage fees for major U.S. airlines. Airline first checked bag, second checked bag, Southwest $35 to $40, estimated, $45 to $50, estimated, Delta $35, $45, United $35, $45, American Airlines $30, $40. As you can see, Southwest's anticipated fees are on par with its competitors. This move effectively eliminates a key differentiator for Southwest. The airline will need to find new ways to attract customers in an increasingly competitive market. Southwest's decision to implement baggage fees is primarily driven by financial considerations. The airline projects that these fees could generate a whopping $1.5 billion in annual revenue. This significant sum could bolster Southwest's bottom line and appease activist investors demanding higher profits. However, this potential revenue comes with a caveat. Southwest estimates that the move could also cost them $1.8 billion in lost business. This estimate reflects the possibility of price-sensitive customers switching to competitors who offer lower fares, even with baggage fees. The airline's financial projections for Q1 2025 also tell a story. Initially, Southwest projected a 5 to 7% increase in revenue per available seat mile. However, after factoring in the potential impact of baggage fees, this projection has been downgraded to a more modest 2 to 4% increase. Section 5. LUV takes off immediate stock market reaction. The stock market's initial reaction to Southwest's announcement was surprisingly positive. LUV, Southwest's stock ticker symbol, jumped by 7% in morning trading on March 11, 2025. The stock reached $30.75, a significant leap from its March 10 closing price of $28.18. This initial surge can be attributed to investor optimism about the potential revenue from baggage fees. However, the stock's performance throughout the day painted a more volatile picture. LUV opened at $32.28, dipped to $26.80, and then stabilized around the $30 mark. This volatility suggests some uncertainty in the market about the long-term implications of Southwest's decision. While the potential for increased revenue is appealing, the risk of alienating customers and losing market share cannot be ignored. Section 6. Turbulent skies ahead, long-term stock predictions. Predicting the long-term impact of Southwest's baggage fees on LUV stock is tricky. Some analysts remain optimistic, pointing to the potential for increased revenue and a leaner, more profitable airline. Others, however, are more cautious. They cite concerns about customer backlash, increased competition, and the potential for a price war among airlines. One notable voice of caution comes from Citi analyst Stephen Trent. Trent recommends selling LUV stock, citing market turmoil and concerns about demand in the airline industry. He believes that the potential downsides of baggage fees outweigh the possible benefits. The coming months will be crucial for Southwest. The airline's ability to effectively communicate the changes, manage customer expectations, and maintain its brand image will be critical in determining the long-term success of this strategic shift. Section 7. Public uproar. Travelers react to the news. The public's reaction to Southwest's announcement has been swift and largely negative. Social media platforms, particularly X, formerly Twitter, have been abuzz with disgruntled travelers expressing their frustration and disappointment. Many lament the loss of what was once a key differentiator for Southwest. The hashtag #SouthwestNoMore has been trending, with customers sharing stories about how bags fly free influenced their travel choices. Some are even threatening to boycott the airline and switch to competitors, despite the prevalence of baggage fees across the industry. This vocal backlash highlights the emotional connection travelers had with Southwest's bags fly free policy. It underscores the importance of customer perception and brand loyalty in the airline industry. Southwest will need to work hard to mitigate this negative sentiment and rebuild trust with its customer base. Section 8. Investor pressure and the future of Southwest. Southwest's decision to end bags fly free is a telling sign of the times. It reflects the growing influence of activist investors on corporate decision-making. These investors, often focused on short-term profits, are increasingly pressuring companies to prioritize shareholder value, even at the expense of long-held traditions or customer-centric approaches. Elliott Management, a prominent activist investor, has been particularly vocal in its push for Southwest to implement baggage fees. The hedge fund, known for its aggressive tactics, acquired a significant stake in Southwest in 2019 and has been advocating for changes to boost profitability ever since. This trend of investor activism raises questions about the future of the airline industry. Will we see a continued erosion of customer-friendly policies in favor of profit-maximizing measures? Will airlines be forced to choose between appeasing investors and retaining loyal customers? The answers to these questions remain to be seen. Section 9. Conclusion. Navigating the new skies of air travel. The end of Southwest's bags fly free policy marks a significant shift in the airline industry. This policy, which has been a cornerstone of Southwest's customer-friendly approach, is now being reconsidered in light of changing economic conditions and competitive pressures. It signals a move towards a more homogeneous playing field, where baggage fees are the norm rather than the exception. This shift could potentially level the playing field but also erode some of the unique advantages that Southwest has enjoyed over the years. While the financial implications for Southwest are yet to be fully realized, one thing is certain: the skies of air travel are changing. The airline industry is in a state of flux, and adaptability will be key to navigating these new skies. For travelers, this means being more vigilant about baggage fees and factoring them into the overall cost of airfare. It's no longer just about the ticket price. The total cost of travel now includes these additional fees. It also means reevaluating airline loyalty programs and considering alternative travel options, such as train travel or road trips for shorter distances. These alternatives might offer more value and convenience in the new travel landscape. For investors, the situation is more complex. They must weigh the potential for increased revenue from baggage fees against the possible long-term impact on customer satisfaction and brand loyalty. While the potential for increased revenue from baggage fees is enticing, the long-term impact on Southwest's brand image and customer loyalty remains uncertain. Investors will need to keep a close eye on how these changes affect the airline's market position. The coming months and years will reveal whether this gamble will pay off or if Southwest will need to adjust its course to navigate the turbulent skies of the airline industry. The future of air travel is indeed uncertain, but one thing is clear: change is on the horizon.